Managing your finances in a challenging economy. Nigeria has gone through thick and thin in the last 1 year. A lot of things have happened, and we have decided to have this conversation at the moment. Now, who is going to be speaking to us today? Who exactly is our speaker? And as you know, Human Capital Partners actually take pride in choosing the right speaker for the right moment. The person that will be speaking to us today is no other than a finance expert, and his name is Dimeji Shonowo. Dimeji Shonowo is an FCA person from the year 2012. He's certified with the FCA, and he's also has a master's in business administration from Manchester Business School. Dimeji has over 23 years of investment experience, all right, right from the year 2000 till date. He was the former head of investment banking at IBTC, now Stanbic IBTC Bank, and he is currently a partner of SFS Capital Nigeria Limited. Dimeji has handled several similar sessions across several organizations and, of course, across the globe. Now, SFS Capital has handled several major portfolios, all right? And some of them are what I'm reading out at the moment. They are the fund manager in the Securities and Exchange Commission. SFS manages portfolios for industrial clients, family offices, and net worth or high net worth individuals in Nigeria. So this is the kind of portfolios that are being managed by SFS, and Dimeji happens to be one of the partners of that great organization. So he's going to be talking to us today. All right. So without much ado, I would like to welcome the facilitator for the session today. Dimeji, you are welcome. We are happy to have you on board. I have a lot of people listening to you at the moment. You don't want to know the numbers. We have a lot of people listening to you now. So over to you to actually take the session. Thank you very much.
Thank you very much for the intro. And welcome everyone. And it means different things to different persons. And we are all in different stages of our financial journeys. And the good part is that we all have similar questions that are burning in our heart. Here's the good news. I have the experience and I have some information happy to share with everyone. And I hope that within the hour and a half, we'll be able to deal with as many questions as possible. Here's not so good news. The conversation will start and end in 90 minutes because, as I said earlier, we are at different stages of our journeys. So we're going to start conversation here, and we can take it in other presentation sessions and meetings in the future. I will share my screen immediately so that we can get started with today's session. Our conversation is going to be broken into parts. The first part of our conversation is going to be on my presentation, which will be talking about the macroeconomy and what we should invest in as individuals. The second part will be taking questions because from questions from various participants, we'll be able to have a deep dive into the narrative on managing funds for clients and managing your finances in challenging environment. I'll go straight to my first slide. This slide is quite interesting, and here is why. It's a quote by one of the top investors in the world. His name is Ray Dalio. It says, if you have not been worried before, then you need to be worried. But if you have been worried before, then you need not to worry. Sounds a bit confusing, right? But as we go on with the presentation, you get to understand it better. If you're not worried, you need to be worried. And if you're worried, there's every possibility you've done the right things and you don't need to worry anymore. As I said, the first section, which is going to talk about managing finances, is going to be led by the macros, what's going on in the general economy. I'm sure anyone that has had access to newspapers, the internet, knows what happens to our currency, falling all the way to 1,900, and in recent weeks, appreciating to about 1,250. What's the story behind this? We've heard about the GDP of the country staying at lower than 10%. How does that affect us? Inflation at front and center in the conversations in offices and homes. It's gone up to above 30%. What's the implication of this? We've heard questions around core and headline inflation. The government talks about focusing on core inflation and not headline inflation. There are questions around the differentiation between core and headline inflation. I'll quickly answer that. Core inflation simply is inflation minus energy price and cost of food, while headline inflation includes energy price and cost of food. So the question for economists is, why are you excluding energy and cost of food? Are we not participating in that as well? The next part of the presentation is going to talk about creating a safety net for ourselves. Countries in uncharted territories, we have not seen inflation at north of 30% for most people in their work life. We have not seen the NPR rate go up by 600 basis points in 4 weeks in record keeping Nigeria, and is at its highest rate in 40 years in Nigeria. We have not seen the currency at above 1,000, not talking about 1,900. How did we get to this point? How do we protect ourselves? We've seen questions coming saying that incomes have dropped despite the fact that figures have stayed the same. I guess that participant is relating to inflation. We will address each and every point in the course of the presentation. We have to start from the macros. We have to take it from the top down as a country. Take what's going on in the country, in the center, how is the center holding up? Then we'll take it down to what's going on your working table or your office table. Macro conversation starts with what's known as GDP, gross domestic product. Gross domestic product simply is the income earned by a country. That's what gross domestic product is, the income earned by the country. How has it changed over time? In the COVID years, it went down, but after the COVID years, it started going up steadily. The last print we have is at 3.46%. It means the country is growing by that much, 3.46%. Economists will tell you that having the absolute GDP is not enough. It has to be compared with the population growth in the country. So GDP per capita seems to be relevant. GDP per capita in Nigeria is currently negative because our population is growing faster than our income, GDP. Our inflation, currently at 31.7% from 22% this calendar time last year. And some would argue that it is higher, and rightfully so, because food inflation, which accounts for about 50% of the basket of inflation, is currently running closer to 40% than 31.7%. The argument from the Apex Bank saying that we're in a better position than countries like Turkey that have inflation at about 70%. Well, that's not enough to make people happy because they feel the cost from purchasing daily goods and considering the fact that there are no form of palliatives for many persons. And very importantly too, there are no palliatives for producers themselves. So the metrics don't seem to be adding up for them. Oil price, that has gone up steadily, currently at 89.21 as at last print from OPEC. Nigeria is benefiting from that because our oil production has become stable and we should see accretion to our reserves as a country in that regard. Also quick to note that the price of cocoa, because cocoa is a major income earner for us, has gone up by several folds. It's gone up and is about 10,000 per ton now, $10,000 per ton, up from about $3,000 per ton last year. Nigeria produces about 250 tons of cocoa, so we should harvest about $2.5 billion from cocoa, which should be very helpful. The flows from diaspora is known to be about $30 billion. The flows from cocoa are $2.5 billion. The Central Bank of Nigeria has told us that they were able to attract about $1.5 billion from foreign direct investors in the last 30 days. If that is kept up throughout the year, and there's a possibility that we could actually attract over $25 billion from foreign direct investors. This should help stabilize the Naira, but that's our next topic, our next line, the FX. My FX chart looks strange because it captures quarter on quarter. The quarter 2023 December, the currency was about 900. And March 2024 is about close at about 1,300. A lot of things happened between December 2023 and March 2024. So data can sometimes be misleading. Between December 2023 and March 2024, we saw our currency nosedive to levels previously unseen, 1,900. And within 2 weeks, we need to go up from 1,900 to 1,300. So what occurred? How did it go down so fast? There are many factors that contributed to that. The lack of communication by the Apex Bank to the investing public and to the public as a whole meant that the speculators running the show. As a result of that, there was a scramble for immediate need for dollars, from individuals trying to protect their investment to those needing to actually pay on their obligations in foreign currency, obligations that could include tuition, mortgages, and health. And in some cases, manufacturers do that, trying to make sure they have enough stock should we run out of cash. But since the MPC meeting started, we've had a number of monetary policy shocks that have been added to the system. Monetary policy tries to stabilize the country. And what monetary policy does is it has tools to use in stabilizing the country, because price stability is key for every country to plan. What monetary policy has done is to take up the monetary policy, which is now at about 24.75%, the highest rate we've seen in record keeping in the country. What's the implication of that? We'll come to that in a few seconds. Also, monetary policy has adjusted what we call the yield curve control, the interest rates, the treasury interest rate. So you've seen treasury rates go up in January at about 10% for the 364 days, the back end of the yield curve for treasury bills, to current levels of north of 24% for 364 days. Here's how it has helped the FX market. It has reduced the money in circulation because the government, from our record keep, has mopped up about 7 trillion from the market from treasury bills. And I must add that even in the bond space, we've seen 10-year bonds being taken by the government by as high as 20%. So government has tried to mop up as much money in the system that they can. More importantly, there's alternative to investment. So investors really do not need to be in dollars, can clip 20% coupons or interest on their investments yearly. As a result, they do not have to go into foreign currency to protect their funds. Also, the government has said that its long-term inflation goal is at 21%. So investment for 1 year at north of 25% gives a real yield of about 400 basis points to investors, which means you don't get to money because inflation is a backward-looking data. while the interest rate is forward looking. So what the government is saying is within a year, inflation should be 21% from our records. And they have access to the data. And they are saying that if you're going to earn over 25% for investing in 1 year, then you're in a positive yield territory. We hope that occurs because there are some pressure points to that data. The key pressure point is the fact that the government expected to have a minimum wage between 100,000 to 200,000 for civil servants in the country as a whole, effective May. And that's largely is inflationary, because inflation is simply the difference between money supply and production. That's what inflation is. So if money supply increases from salaries and there's no production backing it up, then we could have a problem again with regards to inflation. The structure of the country is in a strange position because the money supply currently is about 100 trillion. We didn't get any help from the 30 trillion print by the Emefiele administration and about 10 trillion from the previous administration. So we have about 40 trillion added to the money in circulation, which was about 60 trillion, making it 100 trillion. Here's the issue. Our public debt, according to Debt Management Office, is now about 100 trillion, with the average cost of funds at 15%. It means that the government will need 15 trillion to service debt, not just servicing debt, not paying the principal. Now, when you put all these pieces together and you compare with the budget and the earnings capacity of the country, you know that the country still has some structural problems that need to be addressed. That's why we are of the opinion that the interest rates may not stay high for a long time. Otherwise, it will put pressure on government's ability to pay its debt. So just fast forward in the conversation, it may be a good time to delay gratification and delay spending and take advantage of the high rates that are, because we do not expect that after 3 to 6 months, the rate to stay elevated at these levels. That's the Treasury bill rate, which is currently over 20%. So I'll move straight to the next part of the presentation, which talked about how the center is holding. I've talked about the inflation rate. We've spoken to the exchange rate and how we got 2,900 and what the government is doing to curb that. And also important to notice the fact that central bank, the apex bank of the country, has said is coming up with new foreign exchange guidelines. And we're already getting questions from clients in that regard. Will the guideline affect my domiciliary account? Will they affect my Eurobond investment? All of these will answer in the Q&A sessions. The macros are important to note, but really we do not have any control over the macros. You and I do not have any control over inflation, food inflation, which is largely driven by insecurity and price and FX. You and I do not have any control over the gross domestic product, the income of the country, because we do not have oil wells that contribute to increasing the income, or refineries or any sort. You and I cannot control the FX. What we can control is those around our kitchen table. What we can control is our expenses. Our income largely cannot be controlled because most of the time it's fixed, except we're business people and we can expand production. What we can control is our expenditure, which takes us to the next step. Many questions being asked. What kind of investment can I do? Will the capital market crash further? We had a very good year for equities, the capital market last year. We started 2024 on a good note, and suddenly we had the rates hiked by the apex bank, CBN, and a number of stocks in the equities market started dropping. Will they continue to drop? There are a lot of uncertainties. If you walk, we have a diverse group here. We have some in the finance space. We have some in the oil and gas. We have some in the manufacturing. We all know that manufacturing has struggled in recent times, with Nasima coming to say that as high as 20% of the industries are closing down. So will I keep my job? Would there be rent hike for those that have to pay rent? Would the currency devalue further? That's a question that keeps occurring when we're advising clients. They keep asking, do I pay my mortgage down? I have health bills in dollars. Do I pay the dollars down? I have children, I have to pay tuition or keep for. Should I save enough to take care of my bills for 2 years? How best do I survive 2024 and beyond? And there are genuine questions about obligations to families and black tax amongst others. So the first step is getting ourselves organized as individuals. The first step is acknowledging your current position. Everyone has to acknowledge his current position. How do I acknowledge my current position? We have to understand what assets we have and what liabilities you have. And in terms of guiding that, your assets include your cash in the bank, your money market deposit, equities if you have some, mutual funds for those that have invested in either dollar mutual funds, naira mutual funds, or real estate investment trust. Homes are assets because they can be sold if you need to. Cars are definitely assets these days because nobody apart from government sector can buy new cars at the moment. So our cars are assets, and if you have to sell, you get better value for it. It's more of an asset because now we're all very conversant with our mechanics' names and the painter's name. We all know them. They're now on our speed dial. Artworks are known to be assets for those that participate in that space. If you know about artwork, then you know a bit about, you know about anyone whose work, the Ife princess called Tutu, sold for over $1 million, £1 million sterling actually. So artwork can really indeed be the asset. The liabilities can be very long. It includes mortgages, utility bills, car loans, margin facility, among others. We have to establish our assets and liabilities. And the objective of this is to find out whether we have more assets than liabilities. If you have more liabilities than assets, not a problem, as long as it's mortgages, because your property value is definitely appreciating. But if it's as a result of other facilities to travel abroad, among others, then you have to acknowledge them and indeed reduce your liabilities. That's the very first step. The next step is to understand what flows through your account on a monthly basis, on a quarterly basis, on a yearly basis. It's strange when I look at my account and I see credit for my salary. I'm wondering, oh, all of these funds actually went through my account. What did I spend the funds on? So even now I'm still struggling. So we are both in it together. We're trying to get better because I still look at some expenses I incurred and I strike them up and say, I'll never do this again. So we're constantly evolving to be better. Income list is always short. It's always a line. I'm either getting my salary, I'm getting bonuses, interest for my investment, dividend for my shares. For those that are lucky enough to have rental income, I mean, not many of us have got rental income. Not many people have got. For most people, it's limited to salaries and bonuses. For the expenses, the list is typically much longer. From school fees, groceries, to car loans, clothing, to utilities, leisure at times, and medical bills, insurance, amongst others. And if you're African, then you have to understand what's called a black tax. Black tax is crucial because we are born into a community and family, and sometimes we're obligated to help. It's important to say thank yous to those that have been kind to you growing up and people you really love. It's also important to learn to say no to a lot of things. And here is why. Many of us start to work at the age of 20, 25. And in Nigeria, as we have, the official retirement age is 60 years old. Some get to work longer than 60, but not majority. So we assume the person that starts to work at 25 and works to the age of 60. That's 35 years of work, which should be celebrated. In the real world, people live up the age of 85. Meaning I retire at 60, I still get to live for another 25 years. Let's put that in perspective. It means that what I've earned from the age of 25 to 60, that's 35 years. I get to live on it from the age of 25 to the age of 80 or 85 in some cases. That's 60 years. So what I get to earn for 35 years, I get to spend for 60 years. That's the importance of this page. You cannot earn 100, you cannot earn 1 million, you cannot earn 5 million, you cannot earn whatever your income is and spend everything and run into debt. Because there will be no savings to take care of you for 25 years. The person will become a dependent relative. Because with advancement in biosciences, life sciences, medicals, we are living longer and spending more into our retirement benefits. It means that from the age of 25, when we start to work, we have to think about the ages of 60 to 85. We have to think about 61, 62, 63, 64, where we still pay our electricity bills, we still pay our golf membership, we still have to pay our estate dues, we still have to pay our DSTV dues. For 25 years, almost the same number of years we spent working. The alternative is not good. You become a dependent relative, waiting for stipend from family members. I'm not sure any part of the Bible or Quran says we should become dependent on our kids. Instead, it says a wise man leaves a fortune for his kids, not the other way. So it's good to acquire assets. It's good to acquire memories. But memories typically are memories, and they're called emotional assets. And what happens is that if there are no real assets to fall back on in the future, it becomes a big problem. Memories like wearing the best clothes, visiting all the countries in the world, flying business class and first class, collecting the aircraft coming back. You have to be sure that you have enough funds to take care of you from the age of 60 to 85, which many people do not think about. That's why we have many voiceless between the ages of 60 and 85. We're glad in this conversation so we can correct. And as I said, we're at different stages of our financial journey. It's never too late. We can always start up, but we have to think about it. Those years are more important because there'll be health bills to be met. In some cases, we still have to take care of, I know people that are 60 and still have children in university. You can't go to the university and say, I'm retired. Can I not pay school fees? That's why you have to understand your personal income statement. And that's why you have to have a budget, because if you fail to plan for these years, they will come. You will live to 60, you will live to 70, you will live to 80, because there's good medical sciences. We are more conscious of our health. And in those years, you have to fall back on your savings. It's those budgets you've done, it's those investments you've made that are going to keep you going, despite inflation. It's an awareness presentation. It doesn't start and end now. It's not for you to get worried, but to be aware and understand the realities of your presence and carry everybody around your kitchen table along. It's a journey, and the journey is not a sprint, it's a marathon. Here with regards helping you with the marathon. As stated, you have to determine and monitor your net worth. You have to form a cashback permanent reserve. We have just about an hour on the presentation, so we can't take a very deep dive into the entire conversation. And that's why we've said investment is bespoke. You have to have other conversations with your investment managers to guide you and hold you along. The good part is that it's a knowledge sharing session, because I'm sure we've done investment at one point in time or the other. And for those that haven't, it will be a good time to start. except of course you are below 25 years old and you have no income. But the moment you've started working, if you are 20 years old, then you have to start thinking about 60 to 85 because it's everyone's reality. You have to form a cashback family reserve. Why is the cashback family reserve important? It's called liquidity. So you can meet your child's school fees, you can meet the day-to-day needs when they fall due. You don't want to put the school fees in equities because equities could fluctuate and you may not be able to get it out. You don't want to put school fees in illiquid assets because you can't sell a window when or a portion of the land when you need money to meet your immediate need. And so the cashback family reserve are funds you set aside that are required for about 6 months. And those funds can be in money market funds because in money market funds, you get to enjoy things together, or fixed income funds. You get to enjoy professional management and liquidity. If you need your funds, you can get your funds within 24 hours and economies of scale as well. Because what the economies of scale does for you is you can plug higher interest rates, despite the fact that you do not have high amounts. You have to do a budget and stick with it. Companies have budgets that guide their thoughts. And that's why companies are successful over years. As individuals, we have to borrow those terms and we also have to have budgets. You can't go home spending randomly over the weekend or daily. You have to sit down with those around your kitchen table, agree what the expenses will be for the month, for the quarter, and as you get better, 6 months and a year, it helps you plan and makes a better home. Education is extremely important. Sometimes we call it upskilling in our firm. You have to upskill because it gets you to higher earnings capacity. Otherwise, you could become not so involved and not so relevant in the organization. So, education, investing in yourself and your family. Talking about investing in yourself and your family. We all live in a global village. The world has become a smaller place from the advent of internet. I mean, we all know how we can keep in touch with our old primary school mates, our old secondary school mates. I remember growing up and when our parents are traveling on holiday or you're traveling on holiday, you just wait for people to come back after 2 weeks and you don't get to hear from them again. But now, people are working in Lagos for Indian firms or for businesses and they're earning their funds there. People are working in India for Nigerian firms. It's such a small world that it's so interconnected at the moment that jobs can be picked up from any part of Earth. Which takes us to our conversation around our incredible moment in time that speaks to the career of the future. Our last slide talked about educating ourselves, upskilling, and investing in our immediate family. The world is evolving. Fossil fuel is still going to be around Nigeria for a while. But the big income earners for ourselves, if we can still reskill, more importantly for our wards and our children, the conversation is around life sciences. The conversation is around DNA sequencing. The future wealth is in renewables. And that's why you have people like Tesla having wonderful valuation. If you've been following the narrative of NVIDIA, a stock that does chips in America, almost becoming one of the most capitalized stocks on the New York Stock Exchange, simply because of talent. Robotics is front of mind as a big major income earner. Energy storage. It's good to be an accountant, but there'll be fewer of us. I'm an accountant. I'm a fellow of the Institute of Chartered Accountant, but there'll be fewer of us that are relevant to the job. What this conversation is about is channeling our words to the careers that will indeed earn income in future. It's still good to be a painter. It's good to aspire to be a footballer. But you have broader chances of success when you study biology. You because of DNA sequencing, which becomes more important as we seek better health for the population of the world. Engineering is going to be really, very relevant because it's going to be in blockchain technology. It helps robotics. It helps in energy storage. The conversation about the wealth generator is in STEM, sciences, and we have to push that to our children. And that's part of investing. Investing is not, of course, you do not want your child to inherit your house and start picking up rent as their major source of income. I'm not sure anyone wants that. What everyone wants is to invest in the child's education so the child can pick up jobs and change that are relevant in future. Chemical engineering is relevant, but as we go into the future, then you have to start listening to renewables engineering amongst others. So this is a very important slide for us because we think that it's one of the education is the best investment. The fact that you're listening to this conversation is because of education. Otherwise, you should be somewhere else. Education is the biggest investment you can give to yourself, to your wards, and to your children. And it starts by understanding the careers of the future. Here are my own thoughts. I'm sure you have that, but certainly sometimes you need guidance from career advisors that have more depth than I do. I like investment. That's why I talk about my investments and my future. Their conversations. What happened to treasury bill rates? How come it's gone up? Can I participate in it? Yes, you can participate in it. As I said earlier, I do not expect to stay this high for more than 6 months. So you have to quickly lock in for a year now. Should I do agriculture? Agriculture is good. We have a population of 200 million people. But guess what? 133 million people are in multidimensional poverty. According to the World Bank, 133 million Nigerians are in multidimensional poverty. It means we are living in what is called a sachet economy. That's what the World Bank calls it from their last report. Nigeria is now a sachet economy where groundnut oil is sold in sachet because people can't buy the bulk anymore. Are you sure you want to go into agri? Another question I ask is, and I tell people is, if you've worked for at least 10 years, 20 years, and you've been getting salaried every month, I'm not sure you're a very good businessman. Because you're a very good businessman, you'll have left the job after 5 years. And don't forget insecurity. Oh, we've heard about commercial papers. There are many questions being asked by clients advising that will the commercial papers default? Because as government rates go higher, it means the commercial papers will have to pay higher for it. You can't invest because your friends or your neighbors are investing. You need to speak to investment advisors to guide you. Commercial papers have indeed defaulted in the country. And as I said earlier, we have not seen rates this high in 40 years in Nigeria. It simply means there will indeed be a lot of defaults. You are better served in only treasury bills at the moment if you must do fixed income investments. How best can I invest in Euro bonds? We'll get to speak to that when we got to Q&A. Should I invest in Bitcoin? That's the question that I've been coming up from clients. And I tell the clients that our regulators do not allow us to advise or to invest in cryptocurrency. And as a result of that, we don't suggest it to clients. How do mutual funds work? Get to answer the question soon. The rules of investing. I'll go very fast on this. Your first rule of investing is not your returns on the funds, but will your money come back? The return on the money. The return of your money is important than the returns on the money. Liquidity comes next. Can I get my money if I need to use it urgently? I have a deal to buy a car. Can I get the money back immediately? Or no, you have to wait till maturity. Or no, you have to wait for a year. Or no, equities, you have to get a buyer for you. If there's no buyer, then you don't get to exit. So you always have to ask the question, what's the liquidity of it? Returns on investment is a distance. You also have to, around your kitchen table, ask questions around the purpose of investing. What is the investment objective? Am I saving for my child's school fees to go to to go to Pan-African University or to go to school in England or in the US? What's going to be the cost? Am I going to depend on luck or some form of windfall to pay the school fees? If that's the case, then hope strategy. And when you fail to plan, then you plan to fail. What's your risk profile? Your risk profile typically depends on many factors, business capacity, and your age. The moment you're above 40 years old, then your risk profile drops, because if you lose the money, possibility of getting it back is a bit high, is a bit low. But if you're 20 and you lose the money, there are high chances you're not in your peak earnings period and you can come back. So your risk profile should be, you should sit down with your asset manager to guide you in that regard. Liquidity requirements always comes every time. When are you going to need money? Are you going to need money quarterly to pay the child's school fees? Are you going to need yearly to pay your rent? Are you going to need money monthly to meet your mortgage obligations, amongst others, so that it guides investing? What is your investment time horizon? Someone comes to you and say, oh, there's this investment that can pay you 25%, and you lock into it. Then you hear that the investment does not mature until 5 years' time. It becomes a problem. So you also have to define what your investment time horizon is. That takes us to the asset class for investing. I want to establish the fact that it's safety first, then liquidity, thereafter returns on investment. I haven't discussed with your spouse and your children on what the investment objective is. And as a group, HCP and SFS, we believe that families should be carried along with the investment so there are no surprises. Then you can start to portfolio create. You can now start to portfolios and allocate your private capital to various outlets. These are the outlets for investing. Every single outlet is cut out of these outlets you have on your screen. You're either money market investing, thereby doing treasury bills. Treasury bills, by definition, are loans to government to meet short-term government obligations or government liquidity. Commercial papers, in their turn, are given to companies, and the ability to pay back depends on the company's liquidity. I must be quick to add that in credit, we are taught that, and we know that debtors never pay down their loans, especially corporate debtors. All they do is roll it over and roll it over and pass it on to somebody else. So if you think the company is good, then you can stay with it. Otherwise, stay in treasury bills, which is what we are advising at the moment. Fixed deposit, yes, with the banks is good. Mutual funds guides you because professionally managed and gets the of all the worlds with mutual funds. Bonds, right? In local bonds, or you're doing foreign bonds. Foreign bonds, typically called Euro bonds. And why they are called Euro bonds is a conversation we have to have another day. What local bonds does for you is that it locks interest rate for you called coupons for over 1 year. So you do not have what investment advisors call reinvestment risk should rates drop in future, because rates will indeed drop in future. We are at peak rates. Rates cannot go higher than this, otherwise government will not be able to fund it. So you are better off locking the rate for a year now, because rates will indeed drop after 1 year. That's why the bond conversation starts in. But bonds we typically encourage to high net worth individuals and corporates, not regular individuals, high net worth and corporate, because they have the staying power. Bonds, yes, that's a dollar conversation. I want to stabilize my currency. If you bought dollar, if you exchange dollar for 1,800 and it's now 1,250, I'm sure you're not very happy about that. But don't worry, your future income is in there and you can still average down. So, and your regret curve in investing should not be so high. Otherwise, as they say, it will the wind before sowing, it will never sow. I think there's a Bible passage in that regard. So Eurobonds typically helps you to hedge against currency fluctuation. And you need guidance in that regard, because some sovereigns have defaulted on their Eurobonds. Argentina has defaulted on its Eurobond. In recent times, Ghana defaulted on its Eurobond. Zambia has done so, Mozambique. So the fact that you're dealing with a sovereign, and by the way, I say sovereign, I mean a country. The fact that you're dealing with a country does not mean the country will not default, just for clarity. Real estate or capital market. Well, we're going to hear about capital markets soon. CBN has come up with recapitalization for banks. So for those that have worked in for over 15 years, they understand what it is for bankers to be wearing t-shirts and saying invest in, buy shares and all that. That time has come again. And either you like it or not, you have to get your checkbook ready, because you have to keep a really this job in the banking sector. So you'll be forced to cut a check and buy shares. That's capital market for you. But that's called the primary capital market. The primary capital market, as we know, is when you go on the floor of the Nigerian Stock Exchange, known as NGX, and you buy stocks and you sell stocks on willing buyer and willing seller terms. Of course, you can have deeper conversations around this. The capital market has done very well in the last 1 year. Will this trend continue? Dangote Cement has returned over 100%. We saw the MTN results, and MTN has negative shareholders funds. What's the implication for MTN? Should I buy at this time? There are many conversations, but once again, it has to be personal client advising, because you can't just give a general advice to everyone on investment. And here's why. We're at different stages of our investment anyway. Some of us are not married. Some of us have got 4 children. Some of us have all our kids as graduates. Some of us are in our 50s and all our kids are in primary school. So you have to create portfolios to meet each family's needs and not just create a general portfolio for everybody. It never works that way. Real estate is about location. And here's why. If you are the richest person in your neighborhood, then you're in the wrong location. It's that simple. Alternative asset classes include artwork, include investing in horses, amongst others, that can be traded. As they say, they're alternative. They're for people that have oil wells, amongst others. Geographies. The conversation around geography circles us back to the fact that it's a global village and people migrate for various reasons, for economic reasons, for safety reasons, for education reasons, amongst others. People opt to have their families in England, in America, in New Zealand, Australia these days, and in Canada. And you can't fault families for such decision, because they definitely have reasons. So investing in geographies is a form of investment. If you find that your family is in Canada, then obviously you're thinking of having a home there, amongst others. You can client advice, you can be guided on how to go about it. If you're in America, you can be guided on how to go about investing in those geographies. You should be buying in Texas, should be buying in New York. If you're in England, should you try London and try cutting out checks for almost £1 million, or should you move to Milton Keynes, amongst others? So there could be advisors in that regard for you. Currencies. In Nigeria, in the last 3 months, investing in currency has become the only game in town, and people have been punished for speculating in currencies currently. Currency, we saw our value of Naira go from 900 at end of December to 1,900 as at last month. Barely speculative. There were no fundamentals beyond the crash. The economists argue that the value of the currency should be between 1,000 and 1,250. Let's see how that is. The key part for us as individuals, as householders, as practitioners in the society, is to have price stability so we can predict. And I think that's what CBN is trying to do, create price stability so producers can predict, households can predict. I find out that I go to supermarkets now and there are no prices on the shelf. I was surprised. So I asked that, when are you going to fix the price on this shelf? I was told that we plan to fix the price on the shelf because prices are changing very fast. when you come to the till, we'll tell you what the price is. That stopped me from picking systems because no one's surprised at the till. I don't know if you've experienced that as well. Going to supermarkets and you find out that there are no price tags on it. Well, some supermarkets are kind enough to give you a spot where you can check the price. But do I want to work so hard checking every price? That's kind of, what I'm saying is that we are facing new realities as a country. The next slide, and these are terms that you need to avoid in investment. If you do not understand the product, gone through some basic education and you've excelled in your studies and you work, chances are you're a very bright person. If anyone comes to you to explain the product to you and you don't understand it, like, in recent times, we've had all sorts of interesting products where you talk about agri funding, peak funding, all sorts of string things, do not add up. Doesn't add up. They are likely to lose money. People have lost money. I'm not even going to talk about the strange investments like the obvious Ponzi schemes like the MMMs of this world. I don't know how people got involved in those conversations. But even once you don't understand it, then ask questions. If they cannot be explained in simple terms, then please walk away from it. You should never act immediately. You should be given a right to go back home to think about the investment before you cut the check. Do not put all your eggs in one basket. Otherwise, you'll be in trouble. Do not do one single investment. You're advised to do some treasury bills. With client advising, you can do some mutual funds. With client advising, you can do some equities. You can even be guided in that regard as well. You should avoid speculating. Investments go up and down. All you have to do is plan to stick with it over time. And if the returns are too good to be real, then they are too good to be real. There's a possibility you would lose the money. Takes me back to my first slide. If you are not worried, then you need to be worried. If you were worried before, there's a possibility you've done all the right things we spoke about. There's a possibility that you've done a budget for yourself. There's a possibility that you realize that you retire at 60 and you still live up to 80 or 85. What it means is that you're saving at least half of your income if you can. Regardless, you have to save something, except you plan to be a dependent relative in the future. If you're worried before, that means you've been doing your health check. It means you have a family reserve. It means you've done a number of investments or you started the process of doing investments. If you're worried before, then you realize that there are fewer spaces for accountants in the future than they have life sciences, than they are for genomics, artificial intelligence, robotics, and others. If you're worried before, then there are chances that safety has been most important thing for investment for you, ahead of returns on investment. If you're worried before, then you'll have said no to so many black taxes, that only the relevant black taxes come to you. If you're worried before, then you probably have thought about buying a parcel of land. You've thought about making the right investment in treasury bills. You've started a conversation around building your home and the conversation around hedging against the currency. If you're not worried about all of this conversation before, then you need to be worried. This is the first part of the presentation. Our lives are defined by opportunities, even the ones we miss. So, do we have questions we need to take? We've had to go through this presentation a bit faster than normal. As we said, investment advisory does not end in an hour. It's a conversation that is ongoing. So this is the very first step. We need to have more of these sessions. And indeed, you need to speak to your wealth manager to guide you all the way. Not necessarily your friend, except your friend has the same income as you are. number of children as you do, the black tax as you do, then you're in the same position. Otherwise, it's always good to see a good wealth manager that can help you optimize and make sure you're the best of yourself financially. So this is the first part of our presentation. We'll be taking questions now because we know we have about half an hour left to go.
All right.
I'll use my experience to answer the questions. And for those I can't answer,
okay,
we can take them.
all right. Thank you very much. Yeah, thank you very much, Dimeji. I'm sure the questions are coming in. Please, if you have a question, please just put them in the Q&A section. Drop them there and we will read them out. But there is a question. We'll start with Dimeji while others are dropping their questions. I can see some applause from the crowd. People are saying, well done, excellent delivery, excellent content, and so on. Thank you very much, ladies and gentlemen, for staying put with us. There's a question someone asked pre this program, and the question said that we have been experiencing a nosedive of the dollar against the naira, and that will that continue? You know, are we going to begin to see that within the next few months, within the next few years, or is this the best of the naira against the dollar that we have seen? Imaging.
Thank you, Sheol. I think can we take about 3 questions together so we can cover as many questions as possible?
All right.
Can you give me 2 questions if there are?
Okay, so that's one question. Now, someone said inflation rate is at 31%, which is our all-time low. Will it get worse? Are we hoping that based on the policies we are seeing from the federal government, it will get better? And the third question I would like to bring up is the MPR is currently at 7.45%. What exactly is the implication for my investment or for investments at the moment? So these are 3 questions we'd like you to take while we take other questions that are being dropped. Yes.
Thank you, Sheol. After 900 to about 1,000, which is not a problem. This is just behavioral finance for those that did finance at university and post-university level. The currency was at 900 in December. December was just 3 months ago. Our recency bias of 4 weeks ago should not make us forget that we should be getting to 900 before we start having conversations around the naira appreciating. The naira has not appreciated so much. When we get to 900, then we can have conversations on it really appreciating, because not much changed. The country didn't was in 3 months. It was just a communication breakdown between the Apex Bank and the populace, which led speculators to running the whole tree amok, technically. So when we get to 900, we can have a sit down and talk about the appreciation of the currency. 31% inflation, will it get worse? I'm afraid that the jury is out on that. We have a catch-22 situation. And what I mean by that is minimum wage is supposed to go up in May, and that is very inflationary for every country. So my guesstimate is that we may still see high prints of inflation eating a tape from the Bureau of Statistics. The CBN has said that they expect the interest rates to be at 21% by the end of the year. We have to respect their bird-eye view because they have access to more data than we do. But in the immediate term, inflation will indeed go up, not downwards. That's the intermediate. So, but in the intermediate term of 6 months, then maybe we'll start saying based on government policies, because monetary policies of the government have what we call they operate with a lag, and the lag is still variable. The fact that they move rates up to 24% does not mean everything changes. It's not a switch of a button. It takes about 3 months, 6 months for it to feed through the entire economy and start having effects. So we won't see the effect until April, which is 4 plus 6, which is 10. That's October, before you start seeing the full effect on October. MPR is monetary policy rate and is typically issued by Central Bank of Nigeria to serve as a guide to banks. So the CBN also comes up with something called the asymmetry window. The asymmetry window, I won't bore you with the details. It simply says that if you're a bank and you need money from me, come to me and I'll give you money at 27.45% plus 3%. Have excess money you want to give to me, come to me. I'll take the money from you at 27.45% minus 1%. That's what CBN does, because CBN is the lender of last resort, is the banker to the banks. So when the banks need liquidity, they always go to CBN. That's why you hear that when banks are in CBN window, what it means that they've gone to take money from CBN. How does it affect you and I? Yes, rates are go up because the MPR anchors rates in the country. But over the last years, there has been some form of discurrent between the MPR and investment rates. There has been some form of de-anchoring. There has been no collision between them. And this can't change overnight. We believe that the treasury rates will be high, but for no more than 6 months. So yes, treasury bills can earn more than 20% if you are willing to take on the duration of up to a year. Treasury bills at the moment. So that's the good news for investors.
All right. Thank you very much for that response. And I believe whoever asked that question has gotten rest for it. This is a question from Emeka Onuoha. He said, "Good afternoon, sir. Nice presentation. What is your opinion on voluntary contribution?" What is your opinion on voluntary contribution? I know this is talking about our pension contribution very likely. So I don't know if it's a question I'd like to take on.
Can I take two more questions?
All right. The next question said, what can we invest with 500,000 to yield profitable returns and sustainability? What can we invest with 500,000 to yield profitable returns and sustainability? And the last question says, as regards the default in sovereign bonds, is there a positive expectation from Ghana Eurobond? There has been a lot about restructuring of the bond in the past, but nothing is being heard about Ghana Eurobond restructuring lately. So these are three questions.
Okay, thanks. I'll quickly take this question so we can cover more, because we have just about 17 minutes more. Voluntary contributions are indeed good, and they have tax implications. Because when you do voluntary contribution, then you don't have to pay personal income tax on it. We do recommend voluntary contribution because anything you can do to protect your pensions, anything you can do to protect your 60 to 85 years is very important for us. As a firm, we like people to live and retire in dignity. So any conversation towards that is well encouraged. Any conversation towards going abroad on holiday is very well discouraged. Any conversation around buying cars is very well discouraged. Any conversation around saving for your future is well encouraged. That said, if you need to buy a refrigerator, then you may have to buy it now. If you need to buy any household equipment, it's good to buy it now because of inflation amongst others. But yes, please, your voluntary contribution tax benefit, and we encourage it. 500,000 investment. Yes, that's why you have mutual funds. Mutual funds, like fixed income fund, like the SFS fixed income fund, for example, with 50,000, you can invest in it, and you get the benefits of those that are investing in tens of millions as well. So wherever your fund manager is, talk to them, they can guide you. And now is the time to do it, in fact. There has never been a better time for money market investment in the country in the last 30 years, or in the last 40 years, in fact, than this. Never a time as treasury bills paid up to 25% in record keep in Nigeria. So it's a good time to invest for those that have liquidity to take on the duration. Ghana sovereign bond. Ghana is always in the news for the wrong reasons. Firstly, saying we're going to meet our obligation. Secondly, saying we can't meet our obligation. Next thing, plan to be out of the crisis in a year. And then they come back to say, oh, we can't be out of the crisis in a year. The investing public has lost faith in Ghana. But Ghana has benefited from what they say, a rising tide lifts all boats. A rising tide because the West is coming out, we've all come out of COVID and economies are growing. So there are chances that Ghana may be able to negotiate and survive. But I wouldn't hold breath on Ghana. If I have Ghana bonds, I would either cut losses if I can, and I have a good alternative investment, because you can swap assets, you can sell, and you can invest in other assets like Seplat, among others. Or you can document it and put it in your will and give it to your children. Maybe by then Ghana will be in a better position. But there are countries like Argentina that have not paid over the last 20 years and they keep defaulting. So you may have to think about switching those assets and going somewhere else and cutting your losses. Cutting your losses is an investment alternative. And sometimes doing nothing is an investment alternative. You can get guidance from us in that regard. Sure, can we take the next 3 questions because of time?
All right, thank you very much for the response. Now, someone has asked a question. What's your take on cryptocurrencies? Is that an asset class you will advise someone to invest in? And then the next question here is there any point in investing in Naira money market, since Naira keeps being devalued? That's the second question. Now, the third question is, will dollar ever return to 700? And what is, okay, I think the second part of what's the current treasury bill rate has been answered. But these are the 3 questions for now.
Thank you very much. So we have the conversation around cryptocurrency has 2 parts to it. As I said, in our local climate, our regulators do not accept cryptocurrency. I mentioned earlier that we live in a small world now, in the global village. In some Western democracies, cryptocurrency is accepted somewhat. I'll give an example of America, where the Securities and Exchange Commission America approved ETFs, exchange traded funds, sorry, for cryptocurrency. As a result of this approval, we've seen cryptocurrency, like the approved Bitcoin ETF, Bitcoin electronic traded fund specifically. As a result of approval, we've seen some of the biggest fund managers in the world, like BlackRock, set up ETFs for cryptocurrency. And as a result of that, individuals and companies have allocated a very small percentage of their portfolios to the Bitcoin ETF. This has taken the price from $20,000 to above $77,000. I know it's now dropped to about $60-something thousand. So someone said that you're not diversified until you're diversified into something you're not so comfortable with. That was someone said. But that said, in our local climate, you're not allowed to invest in it. If you have other avenues of investing globally, then if you put in about 5% of your entire portfolio, my guess is that you won't lose your sleep if you don't get your money back. But we won't recommend you put more than 5% of your portfolio in it. That's for those that have avenue to invest in other climes, because we're speaking to a diverse group of listeners. I know I have listeners from Franco countries. I have listeners from all over the world. So yes, you can do some, but know that they're highly speculative and they're very volatile. So the next question is Naira mutual fund. Should I invest in Naira mutual fund? Is it worth investing in Naira at all? We always have liquidity needs in Naira, so Naira will always be relevant. And with what the actions of the CBN, with conversations around the country bringing in about $1.5 billion in the last 30 days, if this continues, we expect some stability in the country. There are conversations around monetary policy and fiscal policy. What's monetary policy? Monetary policy is simply the Central Bank of Nigeria. That's what monetary policy means. And there are tools in stabilizing the country, which includes interest rates, exchange rate, and inflation. That is CBN's part. There's also a part of the government called fiscal policy. Those are the guys sitting also rock, the ministers, the parliamentarians. Those, because they determine very important parts of the country, namely taxation and government expenditure. If the government is borrowing and spending too much money, and taxation is going up or staying stable, then there's a possibility that there will be too much money in the system, and it could have negative or positive effects on the economy. So Naira is required because you need to meet your day-to-day obligations locally. That said, once again, investment varies from families to families. I do families that have to have kids abroad because their spouses work abroad, and the gentleman has to transfer money, or woman has to transfer money abroad to fund the requirements. What we advise is that you have enough funds to meet your obligations for 2 years at every point in time. If you can, but if you can't, then the minimum is that you have enough funds to meet your obligations for 6 months. That should guide your investment in Naira or dollars. So and you have to respect people's opinion for their choices. You can't, because all my kids are in Nigeria, don't wonder why your kids are not in Nigeria. I mean, those are personal family conversations. If you've opted to keep your kids in New York and you need to pay them, then have enough funds to cover them for 2 years if you can. If you can't, then for 6 months. Then the last question about the dollar and its appreciation. I mentioned the conversation around more flows coming to the country. We looked at the chart of the macros. We've seen that the price of oil is staying up and sticky up. There are chances that the oil will get to $90 per barrel before it comes down to $80 per barrel. And also important to note is that there's not so much investment in the crude oil sector, in fossil fuel globally. What it means is that the price of oil is going to stay up for a long time, because if people are not investing in it, and the world is still demanding it, and the production is not going up as expected to meet the demand, then there's every possibility that the price could stay between 60 and 100. So that said, if Nigeria will just get its house in order with regards to production and reduce oil theft, then there's a possibility that we'll have a stable currency in the near future. That said, we still have our CBN to write decisions and the federal government to write decisions as well. So there's a fine balance you need to have, and you have to discuss that with your fund manager. I think there is some price stability of between 800 to 1,100 for the dollar, for Naira to a dollar in the country. And the price stability can be kept, that band can be kept for at least 2 years, except there's any major shock to the economy. If you have a black swan event, black swan event, I mean by some act of God, as they say. If you have a COVID, for example, that nobody plans for, that's what's called a black swan event, something nobody ever really planned for, then we will have to do some calibration. Sure, can we go on with the next questions, please, because of our time? And for questions that are going to be unanswered, please send them to us all the same. We'll email, we'll put the answers together, we'll email to the participants.
All right. Thank you very much, Dimeji, for your responses. I have 2 more questions. One, someone says the last time I bought dollar was around 450. Wow, you have a lot of money. And is it best to sell now? Or should I hope that the dollar go up? That's one question. The other question, and I think I got multiple questions in this week. Please, can you repeat the treasury bills rate for SFS clients? 90 days, 180 days, and 364 days.
Okay, many thanks. So I'll start with the first question about 450. But sure, I have more questions that I've received there, but since you don't have them, I think I'll just leave them.
Okay.
I thought there were a couple of questions that I got in that Microsoft Word document. I don't know if you have the Microsoft Word document. So you bought dollar at 450 and you think it's time for you to take some profit and move on. Yes, profit taking is good. But how about the reinvestment risk? When you take the profit, what are you going to do with the money? If you have no immediate need for the money, why don't you just hold on to it? That's my advice. But if you have immediate needs, you need to pay your house rent, you need to pay your child's school fees, and you don't have access, then maybe it's time to take some money off the table. If you don't, then you might as well And my guess is your dollar should not be lying idle. It should be earning income for you. Even if it's invested in US treasuries at 5%, it's safe and you should be getting some returns on your investment. If you need guidance in that regard, please contact us. We can guide you, whether the dollars are local or abroad. We can always guide you on how to invest such. Then, I missed the second question. Can you quickly remind me of the second question?
He said, please repeat the treasury bills rate for SFS clients.
Rate for SFS. So what we can do is the treasury bills are auctions that are done by Debt Management Office on behalf of the federal government of Nigeria, and they're done fortnightly. That's what occurs. And you can buy treasury bills directly if you're investing 50 million naira and above through SFS Capital. And we will go to the auction for it. The last close for the 90 days was about 7% discount. For the 182 days was 17% discount. And for 364 days was about 21.4% discount. So that's, well, if you have less than that, then we might have to put you in a folder with other clients. Charge for treasury bills, as you know, the custodian charges for keeping the custodian. We keep our clients' funds with the custodian in line with global best practice. So that the safety is important at all times. So we can have that conversation. We can guide you on how you can go about it.
All right. Thank you. There's a question that just came in, sir. Please, before you take your questions. He said there are several adverts by insurance companies on child education policies. Would you advise it as a good means for hedging for the future?
It's good to invest in anything that's going to protect the child's future and your future.
Okay.
This is the quality of your questions that will matter. So what are they going to invest in that guarantees the monies are going to be paid? Because as I mentioned earlier, the return of the investment is more important than the returns on the investment. So who is the custodian of the business? Does it have a custodian? Does it have a trustee? Does it have a structure around it? If they can tell you that, oh, our custodian is Morgan Stanley or our custodian is XYZ company, the trustee of the business is STL trustees or someone so that oversees it, then sure you can put your funds in it. But if those questions are not answered with confidence, then you may have to think again whether it's what you want, because there are investments that you have to be held for 20 years. Will the company be around for 20 years? If there's no custodian to take care of that, then there could be a problem. So the quality of your question will determine whether you invest in that company. Has the company been around for 10 years? What kind of ratings? Have they subjected themselves to ratings? So a company that has not subjected its books to rating by at least a professional rating agency, then I'm not sure you want to deal with that company and its funds. So I use my own local experience. SFS Capital is rated A by GCR, an international firm as a part of the Carlo Group, and each of the funds are rated by other rating agencies, and they're rated A. So if you're going to subject your books to regulatory scrutiny, you subject your books to ratings, and even your company to rating, it means that you believe in the strength of your company. Then you're inviting internationals to come with their independent opinion of the company. If the firm has all of this is A-rated, then and the funds are A-rated, there's a structure around it, there's a regulator for it. It's regulated by the Securities and Exchange Commission. That means you have the full strength and backing of reasonableness, of reasonability, then you can invest in it. If you do not have all these boxes ticked, then you have to ask yourself whether you want to take that risk. Is it regulated by the Securities and Exchange Commission? Does it have a rating itself? Does it have a trustee? Otherwise, your funds are better invested elsewhere.
Okay. All right, thank you. So you could take your question now, Dimeji.
We're at 12:30 now.
Yes, we'll just take probably 2 questions, and then subsequently we could have maybe another session for this. But let's take 2 questions.
Okay, I'm just opening my own screen here. Okay, the first question I have here is about diversification. The client says that the person says that he's had so funds in equities and you like to diversify. A good idea, because equities, it seems the bloom is off the rose for equities in the country. And if you have some profits you can take, it's a good time actually for you to diversify into fixed income investments and of course treasury investments. It's always a good guide. Another question here talks about someone saying he has his children in America, in university in America, and the is in dollars, and they're able to get money from CBN for that. Yes, unfortunately, CBN has not been able to meet. And right now, CBN has said is also a winning. Is not CBN very importantly said that it is only a participant itself in the NAFEM window. NAFEM is the new foreign exchange market for FX. CBN has said it is just a participant in that market as well, and it's also a willing buyer and willing seller. So you may have to look to other alternatives to paying your children's school fees. And once again, it won't be a bad idea for you to start putting money together for 6 months or 2 years, so that you meet needs as it falls due. Another question I have is, someone asks, what does it mean to return? Okay, I guess I understand what it means. My statement around is more important for you to have the return of your capital is more important than the return of your capital. What I meant is that the ability for you to get back your money in full is more important than the interest rate they're going to pay to you. And that's because in some cases, people will promise you high interest rates and they will not be able to repay back. Someone has asked a very interesting question that, can CBN default on these funds? Because I mentioned that Ghana defaulted. Well, Ghana has been a very sad case because Ghana is the first country that has defaulted on its local obligations. We do not expect, and also Ghana does not really have a natural economy like we do. We have, when I say a natural economy, we have a natural resource called oil. So whether we work or not, oil is going to be drilled from the floor by the oil guys for us. That's a natural economy. That we have over many no, that can always, we believe that can easily meet our needs. So Nigeria cannot default on its obligation. Another question someone has asked, that can we get this slide? If you want to put your email and all that, we can send these slides to you. I have so many questions. One person says that, when are we having the next session for this? I think Shehu, you have probably answered that question.
We'll answer that question, yes.
Okay.
Okay.
Those are the questions that are here for now.
Absolutely. All right. Thank you very much, Dimeji, for the time you have spent with us and, of course, the insight you have shared. Now, this is just the tip of the iceberg to a bigger conversation that comes with our programs. We have about 2 programs where this subject is discussed in detail. We dedicate a couple of hours, even up to half a day to a day, to actually discuss managing your finance. Now, for those of us who are still in employment, we have a program called our Life Planning Series, which we run for organizations, and we drive this entire conversations through it, in addition to a lot of other things like career management. And then for those of us who are very close to retirement, or we are in retirement, we believe that this conversation is extremely important to you. Now, we have a program called the Managing New Beginnings program. This is a very, very engaging, interesting program we have run for several organizations. And we have a module that talks about the entire value chain of finance. All right, starting from personal financial management to investment. And just like we have heard today, investment in 2024, April, may not be exact with the investment in 2024, October, because the macroeconomic dynamics could change, and that could also influence your investment decisions. And so it's important that we keep updating our knowledge with what is happening around us to guide the kind of investment that we make. And we have this robust conversation, much more robust than what we had today, all right, when we have that particular program. Now, in addition to our Managing New Beginnings program, we have things around psychometric assessments, you know, where we expect you to assess yourself and know exactly what kind of venture you're expected to go into. We have things like personal career management and transition. We have inventory management. We have things around personal financial planning. You know, we also have investment. We have managing your wills and, of course, your estate. We have things around real estate investment, things around agricultural investment, things around export and import, entrepreneurship. We have things around that. So all of these things are coming within the combo of this particular program. Now, we have this running from the 3rd to 5th of June, a virtual session. Dimeji will likely be there as well to facilitate this session in detail. And this is actually the fee for it. But hold on, we have a special offer to everyone who have attended this program. We have a special offer to every one of us. And we are looking at a situation where if you are able to key into the investment, you are going to get a whooping over 20% rebate on your investment in regards to this particular program. All right, so if you are able to do that, we'll send you a link in the chat between now and Friday. Okay, we are closing out on Friday. The program actually is worth far more than that. But I want to give back to those who have invested their time here. And if you have a friend who will probably want to be part of this particular program, you can also refer them. Okay, it is something they would not want to miss. We've run this program for great organizations, big brands, top 2-3 organizations across several industries, from the oil and gas sector to the banking industry. We have run this program, and this is the maiden edition for the open training. So it is something I'm sure you will not want to miss. So please, a link will be sent in the chat that you can use. It's called the promo link. It is only for the people in the room. All right, it's only for the people in the room. It's a promo link that can give you this particular program for $220 as well. Other details about the program will be sent to us subsequently. All right, thank you very much for listening. Tutu, want to say something?
Yes, thank you, Shehu. Thank you, Dimeji. It's always a pleasure having you on our panels. And thank you, everyone, for spending time with us. I'm sure you agree with me. Just drop a 1 in the chat if you agree with me that your time was very well spent. Your time was very well invested. Actually, you can drop a 1 for us in the chat. You know, and I just wanted to go back a little bit to something Dimeji had said about the fact that we work for so long, but now we are living longer and longer. You know, and we don't want to be those relatives who are calling their nieces and nephews or calling their children, or because that is not a strategy for retirement. And we've been running this program for years and years, and I can tell you we've had incredible feedback from this program. Dimeji is one of our facilitators on this program. I think the next time we'll have it, we'll probably have other facilitators as well. What we try to do, because I remember somebody asked the question, when is the next webinar? What we try to do is we pick topics that are very relevant, very topical to whatever is happening within the economy, and we bring people on board who can have those discussions. And we felt that this was an absolutely 100%, 150% relevant topic for us. And the question I'd like to leave you with is, how much is your peace of mind worth? You know, how prepared do you want to be when you are done with active working life? It doesn't mean you are done with everything, but at least this daily 9 to 5, you know, when you are no longer doing that, how would you like to be able to just go and do whatever it is you want to do? Dimeji mentioned some things: go play golf, you know, travel, see the world, go on sightseeing, take your kids and your grandkids, you know, on amazing life experiences. But Well, this program is absolutely going to help you with all of that. It's going to help you with what is the vision I have, you know, and how can I begin to prepare, or how can I continue to make sure that I'm on track? I'm sure a lot of you have heard that thing. They say the best time to have planted a tree was 20 years ago, but the next best time is now. So it's really never, ever too late to do it, but you do have to start. You have to start before you can build up. Yes, so you do have to start. So I believe the team has dropped the link in the chat. We have never, ever run this program at that price before. So I would love to encourage each and every one of you to take advantage of that. And if you do have, you feel, wow, you know, there are a number of us who will be interested, 5 of us, 10 of us who want to come together, well, you can give us a call as well, and possibly we might be able to work out some bulk discounts, you know, for volume, for when you have a number of people from about 5 and above, then we can begin to have that conversation. Once more, thank you so much for choosing to spend your time with us. We're always happy that you are able to attend our webinars. Thank you, Dimeji. Thank you, Shehu. Thank you, team. And have a wonderful, wonderful day and rest of the week ahead.
Thank you, everyone.
Yes.
Nice day.
Just so a question in the chat, who is HCP? I don't know if that person is still here. HCP is your host for today, Human Capital Partners. You know, the premier HR consulting firm who aim to, you know, just bring you incredible learning life experiences, learning experiences, I meant to say. You know, so you can Google us. We love to partner with individuals and organizations to just be the best that they can be. We're into training, recruitment, and advisory. A trial will convince you. I hope you're going to sign up for the program. Thank you very much, Ifya. Thank you. Thank you.